Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers, and we're going to do something new today. Now, I don't know if you guys realize, but for the most part, my casting and my videos, I'm completely unscripted. Sometimes I have some bullet points, but that's why sometimes I misspeak or I stutter, and I try to edit most of that out, guys. But I feel like when I come from my heart, it's pure experiences, it's completely genuine, and I feel like it's a better way for me to communicate with you guys, for you guys to relate to the message that I'm giving. Having said that, you guys, I'm completely unscripted right now, and we're going to do something new on this video. I'm going to bring up a Redfin article, and essentially Redfin got with an economist and started doing a Q&A. And as you guys know, I absolutely desperately want to do Q&A on my channel, and I want to bring on some other YouTubers that at least have the ability to talk about the housing market. Whether or not they agree with me doesn't matter. What does matter is that we have someone on our station and on our channel that is at least capable of talking about the difficult things. But we're going to essentially listen to the questions that Redfin is asking, and then we're going to listen to the answers that the economists are giving. And what I want you guys to do is below in the comment section, let me know if you think the advice is good advice or if you think the advice is bad advice. Because you guys, here's what's absolutely wild. Why are so many economists getting things wrong? Right? Why are so many, and why could someone like me, I had a foreclosure and bankruptcies. I'm just some normal dork on the street. How am I predicting things that are happening much better than so many economists? How is that? And I'm going to tell you how. I spent the last 20 years of my life in the ditches, in the field, working my butt off. So I have a different level of realistic understanding of the housing market, in my opinion, which brings me to my next thing. If you guys can, for my efforts, please like this video, subscribe if you haven't, comment below. Understand I'm not a financial advisor, although my bio, realtor, loan officer, and instructor, so I love it. But you guys, either way, let's get started on this article titled Redfin Economist Q&A, How Rising Rates and Economic Uncertainty Could Impact Home Prices, Migration, Rentals, and More. So I'm only going to reference 3 questions in this video, you guys, but go into my description below, click the link for yourself if you want to read it. I do that on all of my videos, so if you want something to make your own video about, just reference my articles. I think the more people that are talking about data, the more spin, the more angles, the better, right? I'm just one person. The more people we get talking about this, the more people will hear the alarm and do something about it, right? But let's get started, you guys, right now. Question number 1, is a recession coming? If so, how will it impact the housing market? Now, you guys already know that I think we're in a recession right now, and I think it will be confirmed this month. I believe that's going to be the straw on the camel's back, so to speak, that's going to break the housing market. But let's see what they say. Okay, so Daryl says, this is the Redfin chief economist, okay? The likelihood of the U.S. entering a recession late this year or in 2023 has increased over the last few months. But even if there is a recession, the housing market looks resilient in the long run. Housing is a stable investment and less risky than other assets, except for me in 2008 led to foreclosure, remember? And here's the crazy thing, the likelihood the end of this year, dude, we're in a recession right now. I'm sorry, let's read TM. Okay, so here's TM, the economist. Here's his response. Home prices have passed their peak. A lot of homes are less valuable now than they were a few months ago, but they're still more valuable than they were 3 years ago, and they'll still likely stay that way. The impact to the housing market depends largely on the severity of the recession. So I guess, what is he saying, that we're in a recession right now? Right? Interesting. Unemployment increasing sharply, which hasn't happened yet and isn't expected to happen, would put an additional strain on demand because people will have less money. But if a recession is mild, mortgage rates could fall and housing demand wouldn't slow down further. So to me, they didn't answer the question, right? That's not, as someone that's a normal person in public, this doesn't help me. Comment below if it helps you. But here's the next one from CZ. I agree that its impact on housing depends on employment. Some people will lose their job, would have to sell their homes, and maybe there's not a huge market of people looking to buy because they're also financially constrained. Even if a mild recession, the unemployment rate would likely tick up to 5 or 6%. You guys, do you remember me saying that on my update videos? I said on my update videos, I expect that if we have a recession, unemployment rate could double into the 6%. That's actually very likely, but let's continue. A noticeable increase, but not nearly as high as the Great Recession levels, which was really bad. It does seem that we're set up for a textbook recession that's fairly mild. Demand got too hot. Let's cool it down. Right now, individual bank accounts and businesses remain fairly healthy. So CZ, a little bit better understanding there, a little bit more detail, but will you guys comment below and let me know if you kind of agree with me? That's a really shallow answer. Did they answer? Did any three of them answer that question right? Here's my answer. I definitely think that there's going to be a recession. I think we're in a recession now. And I think once that recession hits, straw on the camel's back. And yes, unemployment will go up. A lot of things are going to get worse with a recession, right? Small businesses, people are going to lose their job. Second jobs are going to be harder to find, right? A lot of those types of things are going to happen through that recession. Take a look at this next question right now. But here's the second question. What's going to happen to home prices? Now, here's what I want you to pay attention to, guys. Listen to what he's saying. Home prices will decline year over year if there's a recession. So this economist is saying if there's a recession, which we're in right now, whatever, home prices will decline year over year. That is massive, guys. Finally, Redfin. So here's the thing that I've learned. Once Redfin, Zillow, CoreLogic start saying that there is a recession or planning that into their numbers, they're going to have a much more realistic outlook. Home prices will decline year over year if there's a recession, and they'll decline from their peak even if we don't enter a recession. But prices aren't likely to fall below pre-pandemic levels nationwide. We're seeing a lot of negative news, and economists are prepping for a worst case scenario. But remember, that doesn't mean the worst is going to happen. To me, if home prices go down in 2019, that is awesome, you guys. But to me, I'm happy if they go down to the beginning of 2021. To be honest with you, I'm happy with 15 to 20% reduction. That's a lot of money, you guys. Remember, national average in the 2008 Great Recession, 19%. That was the national average. So continue to put things in perspective. And by the way, people get this wrong all the time, but from peak to low took 2 years. From the last recession, the last collapse in 2008, from peak to low, 2 years. Remember that. People constantly say 4 years to hit the low. 4 years. Wrong. 2 years. Let's continue. So here's what TM says. Some markets will see year-over-year price declines and some won't. Places that had big demand booms during the pandemic, like Boise and Sacramento, will likely see price decline, while places that remain relatively unaffordable may not. The most expensive metro areas and those with a lot of tech workers like the Bay Area will also likely see price declines as the stock market falls. This is the first time, you guys, that Redfin is talking about decline like this. This is astonishing. CZ continues. For homeowners, buyers, and sellers, all that matters is what happens in your neighborhood. That's going to vary a lot from place to place. Buyers and sellers should pay attention to their local market. Yes. You guys, how often am I preaching about check your local market? No one's going to care about your investment as much as you do, or just pay a professional to pay attention for you. But I'm saying empower yourself. The last one. For a lot of homeowners, the decline is only on paper. If you're not selling or refinancing your home in the next 6 months or year, your home being worth a little less now than it was a few months ago won't impact you. Home values typically rise over time. So very interesting, you guys. Although I thought a few of those responses were a little shallow, but thank God that Redfin is now talking about decline in price and recession, because that is what was missing in my eyes from Redfin, Zillow, and CoreLogic. So now they're going to have no choice but to talk about that. And I believe once the recession is confirmed in July, again, I don't have a crystal ball, but I am screaming, we got to be in a recession. We have to look at everything that's going on, but they're going to have no choice but to start equating that. And when they start showing negative decline and negative equity, imagine the fear that is going to spread into the seller's market. Let's continue with the last question right now? This is a good one, you guys. Okay, so here's the question. What's your advice for buyers who regret not buying a home earlier this year when their mortgage payment would have been lower? This is an interesting one, right? So this year, that means January of 2022. Let's see what advice they should be giving in their mind to people that were buying in January 2022. Here we go. CZ says, you have options. Remember that you aren't locked into a 30-year mortgage with a 6% plus rate. Home buyers have the option of refinancing in the future when rates come down. That's wrong. They must qualify. They cannot refinance if they're upside down in their house. It's called LTV. It's a qualification to refinance. And what do I know? I've just been a loan officer for 21 years. Let's continue. I would also consider I can't believe he's saying this. I would also consider an adjustable rate mortgage. Buyers can save tens of thousands of dollars over a few years by taking out an ARM, which have lower interest rates instead of fixed rate mortgages. Borrowers can refinance their ARM into a fixed loan down the line. Can they? ARMs are risky because it's hard to predict when rates will be when the loan resets. But they are a good option for some buyers, maybe those who aren't risk averse or those who have known they won't keep the home for long. Wow. Let's see what the next guy has to say. If you're going to live in your home for 7 years or longer, remember that not only can you change your mortgage rate by refinancing, but your home value will likely go up. You don't need to worry about year-to-year changes in price. Even if the value of your new home declines next year, the housing market is very unlikely to crash. Ride the ups and downs. Housing is a stable place to invest. It's steadier than the stock market right now. And one of the great way for buyers to cope with the high rates in a cooler market is to buy down the mortgage rate with higher points. That essentially means buyers pay more upfront for a lower monthly interest rate payments. But here's the thing, you guys, that's not smart because he just said refinance down the line. So if you're paying thousands of dollars to buy your rate down, you must recoup that money. It takes a certain amount of years for it to make sense for you to spend thousands of dollars up front to lower your interest rate. So I absolutely hate this, right? This is driving me crazy because, again, you cannot guarantee you can refinance. You must afford the home right now and expect to pay that payment for 30 years. If you have that mindset, you're going to be safe. Let's continue. These guys are making me frustrated. Here's the last thing. Take advantage of the fact that you're less likely to encounter a bidding war than earlier in the year. You're much less likely to pay six figures over the asking price in a competitive fence. That could outweigh the impact of higher mortgage rates and actually save you money. So economist, what is this? Number 3 says, if you buy right now, you're going to save money. Mind blowing, right? And these guys went to college for who knows how long and work for a giant company. This is shocking, you guys. Do me a favor, comment below. Let me know how you feel about these very intelligent, very college educated. They probably have a whole bunch of school loans. Let me know what your opinion of their advice is. Maybe I'm wrong. Maybe they're right. I just don't think so. And remember, you guys, remember my story. Maybe I am a little biased, but can you blame me? I had a foreclosure. It took me 10 years to crawl out of the ditches to become an investor again. I don't want you guys to have to do that. Remember, upside down. I got trapped upside down in my house, 300,000 in SoCal. I could not sell. I lost my job in a recession. Foreclosure followed me around for 10 years. That doesn't have to happen to you. Why these economists and why these companies don't prepare for the worst is beyond me. Do you guys see how optimistic they remain? Right? Do y'all see the problem with that? Do me a favor, you guys, comment below. Let me know that I'm not crazy, that you guys at least somewhat agree with me, so I know that I'm making the right plan even for myself. Because remember, you guys, I'm leading my family down the same path with you. I'm putting my money where my mouth is. Everything that I'm telling you, I'm doing myself right now. So in other words, you guys, I plan on taking you through this entire journey with me. Now, I appreciate you guys watching my video. I really like listening to other people's opinions and talking about that. So I hope to be doing that more. And I hope to bring my own live Q&As to you guys. Other than that, you guys, if you're out there investing in real estate, I do wish you luck and I hope you win.